I think we're online. Hello, welcome everyone to this important event on the future of financing infrastructure in Africa. I could ask everyone in the room to sit down, please, so we can start with the audience online. My name is Nicolas Potier. I'm a research fellow here at Bruegel, and we're very happy to have this cooperation with the Center for Global Development and the Japan International Cooperation Agency. Because we really feel like this is an inflection point for global development in general, but especially if we think about building infrastructure, climate resilient infrastructure in Africa. We have a crucial US election coming up very soon that might really change the approach of what is still the hegemon in many ways in the global system. We might have a president that doesn't believe in many of the multilateral institutions that have been crucial to global development in the past. We have China that is in what increasingly looks like an economic malaise. We've seen China revamping its BRI, and we still don't know what the new Belt and Road Initiative would look like. And here in Europe, we have an incoming commission that is, in the moment, at this particular point in time, defining its new priorities, defining what it wants its development policies going forward. And of course, here in Europe, many of us in Brussels are kind of soul-searching about whether our model built on openness, built on cooperation, built on the orthodox, maybe economic principles is still viable in the future. And this really changes how global corporations, how infrastructure finance will work in the future, and it will have effects for countries all around the world. And today we want to talk about Africa, and it's always a little bit silly to talk about a continent that is as diverse as Africa as one entity, but there are common challenges that many countries in Africa face, and I think we can kind of, having this framing helps us to dig down on these challenges. And of course, one of them is just the amount of finance that is needed to promote SDGs, to build climate resilience, and to allow African countries to leapfrog into a green future, in a green economy, and kind of avoid many of the mistakes and of the dirty pollution that happened in advanced economies while they are developed. But also we see that this geopoliticalization of aid really changes the way that we do aid and we do development finance. And to give one example, I think here in Brussels, what is very, very kind of pertinent, is the shift away from something that was very much focused on development as SDG focused to something that is really focused on strategy. And I think nothing has made this clearer than the leaked draft book from DG INFRA that basically talks about development very much as a hawkish exercise in geopolitical power, and talks about prioritizing geopolitical interest over development. We also see this when you look at the memo to the new commissioner of the policy priorities. SDGs come last before they talk about many other things. Also important things like climate, but it's very clear that there's a shift here in town, and that reflects in your reality. We at Bruegel, we published our own memo, just to put this here on the camera, where 3 of my colleagues they wrote their own recommendations, and we want to push back against some of these developments because we think some of this goes way too far, and there's a risk of losing credibility if we kind of blend too much geopolitical interest with development finance, that these might not be seen as legitimate anymore. But this new approach that is to some extent pushed by the BRI has opportunities and has risks. The opportunities really is that on the one hand we have a renewed focus on infrastructure, and we have seen in China and other Asian countries how successful infrastructure-led development can be, and how it can deliver. Of course, there's opportunities in development finance being seen less as kind of like a charity exercise, but actually as a strategic exercise. We might have more serious money behind it and also more serious thinking behind it than in the past. It might be less often. But there's also the opportunities for countries in Africa and around the world that actually the balance of power has shifted fundamentally. That now in the DG INFRA draft book kind of accuses countries to some extent of going shopping around the world for projects. But actually this just reflects reality that nowadays there might be more than one donor country or more than one financial promoting country. It might be an advanced economy, or it might be China, and actually this gives developing and emerging markets much more power in defining what the conditions they want to do this project under. But there are also real risks. And the first one is the one I think that was put forward in the memo, is actually the risk of deprioritizing important things that we know are important for development and doubling down on infrastructure. The risk is also, of course, that we've seen in the past many of the mistakes that the BRI did are arguably mistakes that the World Bank and also Advanced Economy did in the past, of prioritizing big ticket items, prioritizing white elephants that kind of give nice press at home over actually governance and delivering on SDGs. And we see that many of these projects actually backfired in terms of development. And there's a real risk here that we kind of repeat that exercise. And of course, there's a real risk that I think sometimes Brussels in particular is tone deaf to concerns in these countries, and how some of these languages actually that we use in these projects is very patronizing. So I'm very happy that we have like this excellent panel here to dig through all of this to kind of figure out how it will go forward. And I will give it to Michaela to introduce the panel, and then actually going forward to moderate the panel. Thank you.
Super. Thank you very much, Niklas. And welcome to all of you. Welcome to this event on financing infrastructure in Africa, where we really are trying to get to the crux of the problem and the solutions that need to follow. So my name is Michaela Gavas. I'm the Managing Director of the Center for Global Development in Europe. I'm also a Senior Policy Fellow. And I'm absolutely delighted to introduce our distinguished panelists for this discussion. So if we start online, we have Mr. Ando Naoki from JICA, the Japan International Cooperation Agency. Mr. Ando is a Senior Vice President of JICA. He oversees the Africa, Middle East, and Europe Department. And JICA is a critical actor in building infrastructure partnerships, in mobilizing capital, and promoting concessional lending in Africa. I should also mention that JICA is celebrating its 70th anniversary of Japan's government-to-government economic and development cooperation with developing countries. Also online, we have Mr. Amin Idris Karama. He is the Director for Infrastructure and Energy, Industrialization, Trade and Regional Integration at the African Union NEPAD, the development agency. It is the development arm of the African Union and focuses on sustainable development and infrastructure projects across the continent. One aspect that we're going to be talking about particularly in this event is the Infrastructure Project Preparation Facility. This is the IPPF, which is led by NEPAD, and it's central to helping African governments prepare bankable projects that can attract international investment. And now moving to my left in the room, Mr. Fola Fagbule. So Fola is a senior banker focused on infrastructure in Africa. He currently serves as Deputy Director and Head of Financial Advisory with responsibility for corporate finance advisory, mergers, acquisitions, capital raising, and other technical advisory assignments. So AFC is the leading infrastructure financing bank in Africa, focused on private sector-led projects. A multilateral institution, AFC was created by African sovereign states to provide pragmatic solutions to Africa's infrastructure deficit and challenging operating environment. And then finally, we move to Mr. Antti Karhunen, who has very kindly agreed to step in place of Marietta Jaeger. So Antti, who is the Director of Sustainable Finance, Investment and Jobs at the Directorate General for International Partnerships in the European Commission. Previously, he's focused on trade and the Green Deal, as well as steering EU policy on the role of trade in the private sector in development. So welcome to you all. It's absolutely great to have you here. Before I launch into this discussion, let me just set out what the exam question is for this discussion. And it really is how to overcome the barriers, whether financial, political, or structural, that continue to limit progress in infrastructure investment in Africa. And as we all know, this is a crucial conversation to have, given the infrastructure financing gap expected to reach around $15 trillion by 2040. Now, of course, the barriers are well known. We've discussed them countless times, but they include things like the dearth of bankable projects, with a lion's share of projects being stuck at the scoping and pre-feasibility stages, the weak mobilization of private investors, and the limited resources from domestic public sectors. These are just a few of the barriers. I'm sure we will talk about more. But what we want to do is get to grips with the solutions that can unlock the potential for large-scale investments in infrastructure. And of course, as Nicholas has reminded us, this is a conversation that can't be devoid of the new geopolitical reality, not least the focus on national and economic security, the scramble for critical minerals, for the green and digital transitions, and of course the battle of influence between the US and China. And also, let's not forget that the reality is that most African sovereigns actually lack the fiscal space to absorb any new liabilities. So while defaults in Zambia, Ghana, and Ethiopia are the extreme cases of constricted fiscal space, most African sovereigns are at high risk of debt distress. And in fact, debt service now accounts for about 11% of the continent's revenue. So having set that out, I will begin by asking our panelists some questions to get the conversation going. We also want to hear from you, of course, and there will be an opportunity for you to discuss and engage in the conversation, which Nicholas will chair. So if I could go to Mr. Ando first. Mr. Ando, at the 2023 G7 Hiroshima Summit, a key PGII, this is the Partnership for Global Infrastructure Investment, it was held with the participation of leaders of G7 and partner countries. There were private sector executives, the World Bank, and really this was a moment which was focused on mobilizing private capital in partner countries. Could you just tell us a little bit about JICA's objectives in infrastructure investment and how JICA is aligning its strategies with some of these larger initiatives like the Global Gateway and the PGII? And perhaps also if you could say something about how JICA sees mobilizing private sector investment for investment in infrastructure.
Okay, thank you very much, Michaela. It is really a great honor for me to attend this very important event. As Michaela mentioned, this year is 17th anniversary of Japan's ODA. And there are two things, unchanged priorities of Japan's ODA for 70 years. One is human capital development. And second is physical infrastructure investment. JICA have committed always very long-term development strategy. It is human capital and physical infrastructure. And until 1980s, our operations is mainly going to Asian area, East Asia and South Asia. But 1994, we had TICAD, Tokyo International Conference for African Development. That is recently US, China, Russia, EU, everybody has having a African Leaders Summit. But the very initial one is TICAD, the Tokyo International Conference for African development. And that was held in 1994. And it is 30-year anniversary as well. 70 years anniversary of JICA, Japan's ODA, and a 30-year anniversary for African development from Japan. That is what I really, coincidence, but a very important, historical moment for us. And we commenced corridor approach, infrastructure development, corridor approach for the connecting, African continent. That is Mr. Amin is really familiar with this, but that is initiated in 2013, TICAD 5. That is 10 years ago. So we had a long history of this corridor approach of infrastructure development experience. So I'd be very happy if JICA's experience can contribute to getting the crux of financing infrastructure in Africa. There are so many challenges Africa is facing, and infrastructure development in Africa is facing. One is cross-border collective action. That coordination is really, it's easy to say, but very difficult to coordinate. That is one challenge. Another challenge is broadening financial resources, domestic resources, but as well private sector financing. And concessional lending is also very severe situation and very severe debt sustainability situation, as Michaela mentioned already. And also we really need to have very good coordination of PGII and global gateways. That is, collective action is so important to broaden financial resources. And third challenge is unstable government or fragile states or conflicts. Those things are really destroying everything of development efforts and the infrastructure, impact of infrastructure as well. So we really facing a lot of challenges. But one of the most important challenge for me is return of investment. If the financing coming from concessional or public or private, bankability is really important. And the investment has to be associated with return. That is, infrastructure is very national construction of national construction. So the return is not only just a benefit of some factory or some company. It's really, to be industry development as a nation. So, usually bankability sounds like people has to be appraisal of bankability or something. But I think creating environment of bankability is really needed. If we look at the Southeast Asia development, it's all infrastructure investment is associated with industry development. That is really, really important message. And I really want to deepen that kind of discussion today. Thank you very much.
That's great. Thank you very much, Mr. Ando. And we'll come back to the question of the private sector mobilization. But if I could now turn to Fola. Mr. Ando was talking about, one of the big challenges being unstable governments, fragile states, conflict. I'd like to raise this with you, especially in terms of, investments in, if you like, less established markets and challenging contexts. So in a recent report on the state of Africa's infrastructure that the AFC has put out, you highlighted that disparity in access to electricity is the most significant barrier to industrial growth on the continent. Now, energy investment is actually concentrated in a few countries, usually in the well-established markets. So how can the AFC and its partners sort of team up to, if you like, de-risk investments in countries with less established markets and potentially fragile states?
No, thank you very much, Michaela, and lovely to be here with you all. Thank you for the warm welcome to cold Brussels. First of all, I think it's important to introduce us again to some of you in the room who may not know who AFC is. So we are now almost a $15 billion financial institution in Africa that is focused exclusively on infrastructure in Africa. This is entirely all that we do. We were founded about 17 years ago only, and we were founded by African sovereign states, so African governments are members of AFC, but we're unique in the sense that we're a private sector organization, so the majority of our capital has come from private sector investors, mostly financial institutions in Africa, banks in particular, who've mobilized domestic capital to create this institution that is focused on building infrastructure across the continent. So that's sort of the short summary, and now we're working across effectively 35 African countries, building roads, bridges, power plants, heavy industrial assets, and all sorts of large infrastructure projects on a private sector basis, but very often working with governments as well. Now, having introduced us, it's also important, and I will answer the question, to talk a bit about how we see the situation. I mean, from our perspective, Africa is the biggest human development challenge in the world today, bar none, right? It's the single biggest human development challenge on this planet. And so anyone who's concerned about human beings and about the development of human beings, and this goes to the question, why is Africa important? We talk a lot these days about geopolitics and about minerals in the ground, and about climate transition and about what have you, and about the power tussle between China and the US, and what is the role of Europe in all of this. These are all very important questions, but we come to it from a different perspective, which is that this is the single biggest human development challenge that it still remains to be solved in the world today. There are many human development challenges, but this is the single biggest one, and it's our job to see how we can help to solve it in our lifetime, and how we can mobilize support from other people all over the world who also see this challenge the same way and want to help solve this problem. Now, the good news is that in addition to it being a human development challenge, it is also an incredible opportunity for capital to be mobilized from all over the world to invest in incredible opportunities. And to give you one example, which we discuss in the State of Africa report, if you look at the renewable energy potential in Africa, something like only 1% of our solar capacity is being tapped at the moment. In other words, the capacity for us to have solar generation plants across the continent, something like only 1% of it is being tapped at the moment. And if you think about that in terms of how much investment, how much capital, how much equipment, how much needs to go into solving that problem, that's a wonderful investment opportunity for people all over the world, for capital all over the world to be mobilized to solve that problem, and in the process solve a significant human development challenge. Now to the specific question, Michaela, we work across, as I said, 35 African countries, big countries, small countries, and yes, instability, geopolitical instability is, or political instability in many of these countries is a reality that we live with on a day-to-day basis, right? For example, Gabon is one of the countries that we are heavily invested in. We're one of the largest non-Gabonese investors in Gabon. And they had a military coup a while ago. I think that was a year ago or 18 months ago. And that is a big headline event for anybody, including us, that is doing business in that country. But we didn't lose a lot of sleep over this. And the reason why is that we're investing in projects that are fundamentally so important in these countries to all the stakeholders in the country. They're important to the government, they're important to the private sector, they're important to everybody, right? We have we own seaports, own and operate seaports in Gabon. We own and operate a rail line in the country. We own and operate a manganese mine that utilizes the rail line and the seaport to export the manganese to customers across the globe. This is so fundamentally important to the development of the country that very little is going to really change in terms of the reality on the ground, even when governments change. It's not ideal, and we don't like to see instability, but the point of the matter is that when you're working on projects that are fundamentally so critical to the success of the country, sometimes it can slow things down, but fundamentally it's not as big a risk as sometimes it appears to be. Same situation where you've seen instability in other parts of West Africa, like Sierra Leone, like Liberia, like Guinea, where these are all countries where we are major investors in. And we generally speaking don't lose a lot of sleep over it when it does happen, just because of how important and valuable those projects are. But never forget that we're coming, if you think about it in the context of history, we're coming from a historical context where political instability was a daily affair in many African countries, whereas now you have these situations that pop up once in a while, whereas the general trend has been towards stability across the continent. Now, to your question about energy and how do we support and how do we ensure that projects are successful in the countries that we focus on, you're absolutely right that most of the energy investment in the State of Africa report, we show that most of the renewable energy in particular investment that has happened in Africa in the 10-year period between 2012 and 2022 has been located in essentially 4 countries, right? And this is Egypt, South Africa, which are 2 of the most important countries in our portfolio because of huge solar and wind projects that have been done there in that time frame, but also Ethiopia and Angola because of huge hydro projects that have been successfully brought on grid in those countries. Also 2 very critical countries in our portfolio. But those are not the only places. It's just those are the largest places where investment is going. Things are happening in many other places as well. Djibouti is one of my favorite countries in Africa, very small country in the Horn of Africa, where we successfully developed a wind power project that is now contributing up to 1/3 of the energy requirements in that country and displacing heavy fuel oil and other dirtier sources of energy at a cheaper price than they were having before. Same thing in Cape Verde, where we built wind projects that again displaced fossil fuels and at the same time brought down the cost of energy for consumers. So these are the kinds of opportunities that exist where we can simultaneously achieve reductions in costs that help improve competitiveness, that help improve job creation and human development, but at the same time, we are also reducing reliance on fossil fuels. And these same situations exist in many, many African countries. We are working on similar projects in countries, small and large, from Senegal to Cote d'Ivoire to Nigeria, where the potential is, quite frankly, unlimited in terms of what can be done with such a huge population, huge energy demand, and solar potential that is almost unlimited. So I'll stop here just because of time, but the long and short of it is huge human development challenge, huge risks and huge issues to be sorted out, but also one of the biggest commercial opportunities that still exists in the world today.
Excellent. Thank you very much, Fola. If I can go now to Antti, and just picking up on Fola's point about human development and, in fact, human capital as part of investment projects. So some of CGD's research, recent research, in fact, has highlighted that economic and social returns to infrastructure will be significantly higher when accompanied by similar levels of investment in health and education. So infrastructure that is in fact matched by comparable levels of high human capital development actually delivers better outcomes for investors and beneficiaries alike. Now, the Global Gateway, which is the EU's infrastructure plan, obviously focuses on physical infrastructure first and foremost. And while individual projects financed under the Global Gateway might include skills and technology transfer provisions, the infrastructure financing initiatives themselves have generally not been designed to include components of human capital endowment. So how is the European Commission going to ensure that human capital forms an integral part of Global Gateway initiatives and projects rather than just as an afterthought?
Thanks a lot, Michaela, and thank you very much. I mean, really interesting thoughts coming from Fula and our colleagues in JICA. By the way, I wanted to mention also in the beginning that we are doing a lot of partnerships with JICA, and that's really great to be in an occasion to highlight that. I mean, I will answer your question, but I will maybe go back a little bit in laying out. I mean, Niklas referred to some risks, which are exactly the risks that we want to avoid. I mean, not that we would be stone deaf to listening to our partners or that we would leave out some very important areas of development because of focus on infrastructure investment. This is, I think, very good to put the narrative on this one. But just, you mentioned the infrastructure gap. We are talking also of SDG gap, which is currently something around, 4 trillion. That's what we are talking in the UN context. By the way, last week, excellent progress with Summit for the Future, and just to say that the EU completely aligns itself into this new language, which I think is really remarkable start for us. And just to say that the Global Gateway for us is really a narrative which is aimed to support that. It's our biggest vehicle to deliver on the SDGs, but it also is a very strong delivery tool on the human capital, and I explain. But first, so Global Gateway, for those who are not very much familiar, it's our 300 billion euro offer to our partner countries to work on largely green and digital transition, as well as on infra investments in areas like energy, mobility, digital, but also health and education. And now we are living an exciting time with the new commission coming in. So in the mandate letter of the new commission, we are asked to scale up. So we started this in 2021. I think we've come a long way, but now we need to scale up and continue in the path of generating sort of transformative impacts, trying to focus on areas where we as the EU, and that is the Team Europe, EU and the member states are big and strong, and where we can deliver with focus indeed on what our partner countries want. So this is an important notion. We are doing this together with our partners. So for example, we have agreed with the African Union, European Union Summit, we agreed 150 billion investment package into Africa, which is the focus point today. And it's really, then looking at what can we do in these areas that I mentioned together, identifying flagships, and then moving forward in implementing them. It requires a very coordinated and integrated approach. It's also, therefore, a pleasure to work with people like JICA, because we have a number of rather interesting collaborative efforts. I want to mention two of them. A northern corridor development where we are providing maritime access to landlocked regions in Eastern Africa, as well as a West Africa corridor, which is more aiming to improve highway and other hard infra connections so that we can support trade and connectivity in these strategic African regions for greater impact. And there are other notable examples as well. But it's also important to note that the work together with others is also building very much on sort of a multi-stakeholder, multi-partnership model where we work with the governments, where we work with the international agencies, where we work with private sector actors. And on the last one, we really, really need the private sector to come on board. We all know we cannot achieve the SDGs just by public funding, so we need to have the private sector mobilized, and that's, I think, a very important discussion to have, and happy to talk about that also more later. Now to your question. In terms of the human capital, I think that we completely agree with that notion that human capital has to go together with the infrastructure investments. So what we are doing is we have for a long time worked on things like, good governance, education, skills development, the investment climate. So in the context of the Global Gateway, we talk about sort of a 360 degrees enabling environment work, which is about skills development. We have enormously interesting programs on, for example, on opportunity-driven vocational training and education. But we also, of course, very much work on health systems. We have increased our funding to education over this current commission, and our targets was started with 7%. Now we are moving towards much more than 10%. So we are not forgetting these areas, because it is really important that we do not just physical infra, but that enabling infra investments. So, and that's also key, because what we want to do is to find a long-lasting impact. And we have to embed it into people. We have to have skilled people, and this will actually be very determinant for the success of those investments into infra. Take green hydrogen. You need a lot of engineers, so we better start looking together with the government in Namibia, for example, on how we can educate people for that area, and that's what we are doing. So really trying to focus on that. So it's not forgotten, it's actually ultimately really, really an important precondition for the success.
Thank you very much, Antti. Let me come to Amin Idris now. So I mentioned the infrastructure project preparation facility at the beginning of this conversation. This is a multi-donor special fund hosted by the Africa Development Bank, but supports African countries to prepare regional infrastructure projects in energy, transport, and other areas. So NEPAD IPPF was designed specifically to address one of the key constraints to Africa's infrastructure development, which is the lack of investment-ready projects. But as we've seen, a lot of infrastructure projects in Africa actually never make it over the line. So can you tell us how the IPPF helps prepare projects for them to become financially viable? And, what are there any lessons that you would be able to draw from these experiences and share?
Yeah. Good morning, and thank you actually for inviting me for this event. Before I speak about the IPPF, or maybe I think it's important to connect the IPPF to what we have created in ODA-NEPAD, and we call service delivery mechanism, the SDM. Why? Because there is a fundamental problem here. For projects to reach even the level for which they would actually apply for project preparation funding, there is a fundamental step that actually must be addressed. And this is what we are focusing on. I'll come back to that later. Maybe I think when we speak about the infrastructure, it's always good to pick an example, and to really explain what's happening through this example that can be utilized as a best practice. As of now, last year in ODA-NEPAD and the African Union, we have structured what we call the Continental Power System Master Plan, which is the CMP on which actually many partners are involved with, JICA or European Union, African Development Bank as well, and all our member states. This program aims to address our gap in access to electricity. As of now, this year, the total generation capacity of African continent is around 230 gigawatt of power. But what we want is by 2040 to bring it at 1,200 gigawatt of installed capacity, with over 760 coming from renewable energy. And achieving this goal actually requires significant investment, but also a well-structured preparation, well-structured procurement system that actually drive down costs, attract private capital. We are talking about private sector, but also fosters innovation. So what do we do as ODA-NEPAD here? We have created, as I mentioned, the ODA-NEPAD service delivery mechanism, because one of the key barriers to infrastructure development in our continent is the lack of early stage project preparation. Because without proper groundwork, projects become delayed or financially unviable. So we address this issue through our service delivery mechanism, which provide technical assistance to our member states, to our regional economic communities, to our power pools when it comes to electricity, and to many other regional mechanisms, including as well state-owned enterprises in our countries when they request it. And this early stage support actually include feasibility studies, of course, environmental and social impact assessment, but we also align projects with investment requirements. Actually, this is very important. Now, by doing so, we help to significantly reduce risk and accelerate financial closure. So the PIDA quality level, actually, which is another instrument that we have created, further strengthen project readiness and make them attractive to potential financing. The IPPF is one of them, for instance. It can be as well Africa 50, but it can also be another actually project preparation fund that we have created with Afrexim Bank, which we call ODA-NEPAD APPF, so which actually provide seed funds as well. So those steps de-risk projects, and especially those originating from our countries and countries that are perceived as high risk. So thereby, we enhance investors' confidence. And it works because let me share with you some actually good practice, because SDM, of course, when we do that, we focus on de-risking and we bring that to the CBN. But so far, we have some, I would say, successful projects in Africa. It was like what you say, that many projects just die. This is actually the narrative that goes everywhere. It's not necessarily true, by the way. Because across the continent, we have several countries that have demonstrated the effectiveness of, I would say, very good early project preparation and good project preparation. South Africa is one of them. You have this South Africa REI4P program. I'm sure you know about it. That use competitive auctions, and through these competitive auctions, they have attracted over 200 billion ZAR, which is the local currency, in investments, procuring more than 6,500 megawatts of renewable energy. So there was a transparent tendering process that actually ensure cost efficiency and competition, and it drive really large-scale investment. Morocco is another one with the Noor Solar Complex, but also Cote d'Ivoire with the Azito power plant that was developed through a PPP, actually. And this project showcases how, as well, transparent tendering process, tendering system, well-prepared actually projects can enhance regional integration. So let me just go quickly for the sake of time. I think that we have created those mechanisms to help really to attract investment, and we are using instruments like the PPP, project public-private partnership, but also BOT. They help. Those models actually enable governments to share financial risk while benefiting from technical expertise of private partners. So Kenya geothermal, on which actually German government is with KfW is heavily involved in. Actually, that was developed through a BOT contract, and it has diversified the country energy risks and reduced actually really reliance on fossil fuel as well. So the risking is important, and that's exactly what we are doing, because investors often are deterred by political and economic risk. And to overcome this, we really must establish the risking mechanism. We should actually promote the risking mechanism. We are doing that, but we need also to bring sovereign guarantee, credit enhancement, collaborate with international financing, international multilateral sector, and we must as well really double down on increasing, I would say, domestic financing. Oda NEPAD have initiated 2 years ago with our partners what we have called the 5% agenda. This 5% agenda aims at actually mobilizing investment from our sovereign funds, but also our pension funds, to make sure that if we are able to mobilize like 5% of all the assets under management, actually we can significantly reduce as well our reliance on, I would say, international donors. What we need as well, we do appreciate the work we are doing with our partners, but we must increase our own capacity actually to finance our own infrastructure. This is key. This is actually really important. Thank you.
Thank you very much. I realize we are running out of time here, and I also want to give you all the opportunity to ask questions, as well as our audience online. But there's just one more thing that I would like to pick up with all the panelists here, and just going back to Mr. Ando, one of the key challenges that you talked about, and which everybody has spoken about, is this issue of broadening resources. We just heard from Amin Idris about sort of mobilization of public sources, but also there's private capital in for infrastructure investment. I mean, can you just give us a sense a little bit about how JICA is trying to mobilize private capital in particular? And also, if you could tell us a little bit about how you are planning on injecting more concessional finance into the system to, and avoid sort of the worsening of African governments' debt burdens.
All right, thank you very much. Okay. About private sector financing, under PGII, JICA has prepared the 3 facilities. One is facility for climate vulnerable countries, vulnerable to climate change. And the second facility is agricultural value chain and food security. And third one is financial access to the vulnerable people, including women and youth. Those facilities are attracting, public finance and private financing into the, into the African investment. And but actually investing from private sector to infrastructure investment is, frankly speaking, very limited. And according to the 10-year report of PIDA, prepared by Auda Nipad, is saying that just 3% of financing for infrastructure investment for 10 years is coming from private sector. And they are limited to, IT and communication and some very limited renewable energy or something. So, it's, direct investment into physical infrastructure is limited. We really have to, understand. But what we can do is, for example, we can invest transmission line to facilitate, improve the, enabling environment of private sector investment, or prepare SEZ, special economic zone in port. My colleague is mentioned about North Corridor, and the North Corridor is starting from Mombasa. Mombasa port is developed by JICA, and it's very, very nice port there. And it's connecting to the, Uganda, Rwanda, Burundi. Those things are very, transportation system was very good now. But, export of Mombasa port, import is 25 million metric ton in last year, but export is only 4 million metric ton. We really have to say that infrastructure should be associated with industry development. And also, we really need to develop SEZ associate with the, corridor, and they generate, industry to export or some, more food security or human, all services to be developed. That is what we are thinking. And about concessional loan lending to be increased under very difficult condition, the current very difficult condition. I am a little bit, optimistic. The African country really need concessional lending now. Eurobond lending from China, those lending are, very costly, and they really need, cheap concession loans right now for, investment. And they, thanks to World Bank, IMF, MDBs, their efforts is tremendous. And the situation has been improved for 2 years. And maybe I expect, improving better and better. So then, we can provide, and a global gateway, PGII, every partners are committed to provide more financing. Might be private, but could be, concessional, sovereign loan can be, facilitate those, investment, I think. That is my observation. And if you have some more questions, I'm happy to answer.
Okay, great. Thank you very much. I'm getting increasingly conscious of time, and as I said, I do want to give you all the opportunity, and I see a number of questions that are coming in online. So forgive me, other panelists. I'm going to hand back to Nicholas, who's going to sort of chair the discussion and then draw on some of the questions that have come in for each of you.
Thank you very much. So I think we will do a number of questions now here from the audience, both online and in person, but then you also have the opportunity to respond to the questions of Michele, so you can have an opportunity also to respond to that. Maybe first we can see if there's any questions here in the room. Is any hands up here? So we have, I think, in the back there, the gentleman in the back.
Thanks very much. Marat Tartarev is my name, Brussels Energy Club. I've been following Africa for quite a long time. When I was head of unit of expansion at the Energy Charter Treaty, we worked a lot with African governments. About 20 observer countries in Africa were observers of the treaty. Really good discussion, a lot of really good points. Just to pick up something, I'm just sort of wondering to what degree investment as well as finance into infrastructure development in Africa will actually take us away from fossil fuel dependency in Africa. I know where we all want to go, of course, and the type of future that we want to have in terms of sustainability and, sort of green future. But if I'm looking at some major projects at the moment in infrastructure across Africa, for example, in South Africa, modernization refineries in places like Durban, development of port infrastructure for, like the Japanese colleague mentioned, for the development of industries, for, in fact, not just industries, but also export industries, I would say, in places like Mozambique. There's some substantial port infrastructure developments in Mozambique at the moment, which I think maybe some of your IFIs are looking at. So I'm just wondering whether these sort of investments are actually taking us away from, fossil fuels and conventional sort of energy sources, or whether they're actually locking us in a little bit more, albeit possibly developing more energy independence for African countries.
Thank you very much. Do we have more questions here in the room? So here in the first row.
Thank you. Just a quick question on China. Not so much in the geopolitical dimension, but we were mentioning debt distress and infrastructure investment obviously is the topic. And so I wanted to understand a bit your view on the cost benefit of Chinese investment coming into Africa, into infrastructure. Is this to be considered a good development because it helps with infrastructure, or is this aggravating the problem of debt distress? Thank you.
And then the gentleman behind.
Kurt Geisert, I'm one of the guides in the House of European History. We had a discussion in the mission of the United Nations in Brussels some months ago, and someone from the United Nations said, one should not exclude in the future that there will be a cooperation in one or the other point between Global Gateway and Belt and Road Initiative. Can someone react on this?
Thank you very much. Now I will give it back to the floor. You also have a number of questions. You can see them here on the screen. I'm not sure if online they can see them. Maybe I go, of course, first to Fola, because you got also 2 questions online about skepticism of foreign investors, how to overcome them, and also basically the opportunities of investments to drive structural change. Maybe you want to react to those as well.
Thank you very much, and I hope you all can hear me. These are great questions. And this was the reason why I started with how we think about the problem and on what sort of our North Star is as AFC in Africa, and focusing on these problems, because there's so many different things that can distract you from the North Star, which is a human development challenge. Now, to the question about fossil fuels, I mean, I think everyone in this room is aware that Africa is such an insignificant surrounding error, really, in terms of Africa's contribution to emissions globally today and probably for the foreseeable future, just because of how little industrialization has already happened and still needs to happen. And so we see it as, there is a bigger opportunity for Africa to be part of the global climate transition than there is for us to be part of the problem. You have 1.5 billion people on the continent who right now are consuming as much energy as the country of Germany. So the entire continent in Africa, our entire energy consumption of 1.5 billion people is the same as 80 million people I think there are in Germany. So if you situate it in that context, you understand that, we're not, this is not where the challenge is for resolving climate transition. Whereas this is a huge opportunity because we're tapping something like 11% of our solar potential only is being utilized today, of our hydro potential is being utilized today, and less than 5% of our solar potential is being utilized today. So the opportunity for us to industrialize on the back of clean energy is massive, and it's the biggest such opportunity anywhere in the world today. And that's where we are focused, and that's where the support is needed. Now, at the same time, there are many countries in Africa that are completely dependent on, for example, crude oil exports for their survival today. For example, Nigeria, a country of 200 million people, where 70 to 80% of government income is from crude oil exports. Now, it would be catastrophic for you to end something like that overnight. Also, that same country, Nigeria, has one of the largest natural gas resources of any country on the continent. It would be ridiculous for them, for us, to not work with the country to utilize those resources to end energy poverty in that country, which also suffers from one of the most extreme cases of energy poverty anywhere in the world. And by the way, doing that helps us to displace much more costly and much more dirty ways by which those people are generating energy today, which is things like coal and wood and all of these other sources of energy that are contributing, adding to emissions and are adding to deforestation and are worsening the climate crisis. So we don't see a conflict at all in this area, and most of what we're doing, almost all of what we're doing, very hardly any of what we're doing is constituting a challenge from a climate perspective. And I think that goes to answer the question of the last gentleman as well. Now, the point now about geopolitics and about China and the US, and it's the same thing. I think it was Kwame Nkrumah, the first president of Ghana, who said many, many years ago in the 50s, he said, we face neither east nor west, we face forward. And that's really the situation for most of Africa today. You have some countries that have gone, the China route and have utilized, resources from China quite significantly. Countries like, for example, Angola and Zambia and Ethiopia. And then you have other countries that have not gone the China route very much. For example, Nigeria, which has, very insignificant, significant funding from China, but relative to the total pool of capital that has been invested in infrastructure in Nigeria, China is not a material sum. But one thing that is clear is that all the countries in Africa are benefiting from what is happening in China today, in terms of how China has dramatically brought down the cost of many of the items that we require, whether it is something as simple as solar panels, or it's machinery, or it's equipment. That driving down of cost to make it more affordable is extremely critical for a continent that is still in the process of industrializing. And we all benefit from that. So we face forward, and we'll utilize solutions wherever we can find them. Now, to the questions from the audience online, how do you deal with skepticism from foreign investors who might not fully understand the state of the market? To that I say, well, foreign investors are right to be skeptical because there are many ways to lose money in Africa if you don't know what you're doing. And a lot of money has been lost by people who have not been very careful on the continent. But at the same time, there are many ways to make returns, good returns, sustainable returns. All of the folks that invest with us, as we're a bank, most of the capital that we mobilize internationally is from foreign investors. They have absolutely nothing to complain about because they're getting market rates of return, competitive rates of return for the risk that they are taking, and they are contributing to solving problems on the continent. And that's just folks investing with us. You have any number of other investors across the spectrum that are doing very well in Africa. So work with the right partners, work on projects that are important to the countries, work on projects that have been well structured, that have benefited from the expertise that needs to be in place for these projects to be successful. And for the most part, the outcomes are positive. How to position, another question online, how to position these investments and commercial opportunities to drive structural change in African economies. Everything that we do is aimed at driving structural change. One of the most important structural changes that need to happen in Africa is to bring down the cost of things. Inflation is a huge challenge, right? And if you look at our State of Africa report, there's an interesting chart there where there was an inflection point between the infrastructure stock that was growing in China versus the infrastructure stock in Africa as a whole. There was an inflection point in 1996 where China just took off and Africa stayed flat. And what happened in 1996, that was the first year where the Chinese brought inflation to single-digit levels, and GDP growth exceeded inflation for the first time in 1996. So they tackled the inflation problem. It's extremely important. So in Africa, the biggest structural problem amongst all the structural problems we have is bringing inflation down, is driving down the cost of things, starting with the cost of energy. The cost of energy is just too high for us for the level of export competitiveness that we're trying to achieve in the current global world. And so everything that we do, whether it's renewable energy projects, whether it's conventional energy projects, whether it's transport infrastructure projects, is focused on driving down the cost of doing business so that our export competitiveness improves. And as you heard from JICA and from everybody who's doing business in Africa, really, export competitiveness is so critical so that we can then add more value to these materials locally. We can achieve import substitution in the situations where it makes sense, and we can just be better contributors to the global economy. So I hope that answers those questions. Thank you.
Thank you very much. Let me go next to Antti. I want to also, this question was addressed online to Fola, but I want to add it also to your list of questions. You already have a lot, I guess. So there's a lot of discussion in Europe about reshoring, nearshoring, these kind of things. But of course, if a lot of these goods, which we are now procuring from China, some of them could be manufactured in Africa. So what is also the opportunities that you see in this kind of infrastructure development to also promote structural change?
All right, so plenty of questions. Let me pick up maybe from Fula, because I think you said a very good thing moving forward. And I think the thing is actually, what are the pathways that our partner countries want to take? And we are dealing with sovereign partners, and they have to make their own choices. So what the EU is doing is we try to say, okay, here is what we can offer. This is our offer. It's a long-lasting, sustainable partnership among mutuals. We're looking at, of course, we look at our EU strategic interest, but we try to identify areas where it is really beneficial for both. And I think that's a step forward that I think we maybe didn't want to address in the past, but I think it's correct to do it, because I think then you are talking about the core of the willingness of working together. It has to be mutually sustainable and long-term and based on mutual interest. So that's what we are doing, and that's the Global Gateway offer, as well as then I would say on indebtedness, yes, this is a real issue. We don't want to be there for creating dependencies. We know we welcome any signs of addressing these issues. We know that much more need to be done on debt. This is something that we are raising very high in the international fora and try to really promote the moving forward with the common framework and the other mechanisms to try to support that, as well as we are very much in the space of public finance management and trying to help the countries with the macroeconomic side of things, because it's also about how can we improve domestic resource mobilization, work on that. That's the biggest, most steady resource. And when you have that, then of course it tends to be so that investors also get more interested. So PFM is very, very, very important area. so let me answer the question there. How can EU ensure that private sector investors can more easily interact with Global Gateway 2.0? Fair point. It's a complex issue. So a couple of elements there. So first, we are working very much with our member states in a sort of a team Europe, but also team national perspective. If the EU member states can put their DFIs, their export credit agencies, their private sector, and the government together and come up with what are their priorities, I think we can Europeanize that. We can help with our full strength. So in a sense, for the private sector, the first point of call, in my opinion, would be to talk in your country and then come, in a structured way to European level. Then I think we can do more. Second, of course, we are running an advisory group on the Global Gateway. So we are discussing how can we better inform, how can we spread the gospel, how can we work with the private sector in a way that they are better informed. So that's very much on our agenda. Plus what we are doing in our partner countries together with partner country governments is every 2-3 years we organize a business forum in the partner countries, which are really great occasions. Normally a typical business forum would collect about, let's say, 1,000 people. Governments normally very much engaged. The private sector comes. This is a great way to make matches and talk about also issues in terms of the investment climate. So that's one tool. Toolbox then for Global Gateway includes, for example, guarantees that we offer. So we are now, by the end of this year, more or less coming to have signed around 40 guarantee agreements with the European DFIs, which receive a guarantee for us in order for them to then mobilize private sector, meaning through different mechanisms, whether it's about intermediated lending to MSMEs through local banks in Africa, or whether it's about investing in investment funds that are in that space, or whether it's project by project sort of guarantees that they present projects which are in the Global Gateway priority areas. So these are enormous opportunities to private sector to come in. What we do need is also this bankability of projects and project development. So we do need actually to look at the TA, the technical assistance that we provide, so that this can actually happen. So there's many things about it, but I think we are in good headway. So there we go.
Thank you very much. Let me now give the floor to Amine to react to the questions. I don't know if you can see the online questions as well, or otherwise I think they were non specifically addressed to you. But I think these themes of the importance of BRI is one of the big ones, and also what risks do private investor face. I think these were, or how to deal with the risk perception of private investors were big themes on the online questions. Amine.
Yeah, I think I prefer to go back to the challenge of renewable energy, maybe if you allow me, because I hear the question about how can we pull out Africa from the fossil trap. But it's important maybe to really look at the existing data. The first thing, as of now, our power generation capacity is around 230 gigawatt. So out of this, the countries that use fossil mostly are in the Southern Africa region. Otherwise, most of the West African countries or the East African countries, they generate electricity from hydro, basically. And landlocked countries, there are 16 in Africa that don't, especially Saharan countries that don't necessarily have water resources, are still generating electricity from fossil, but the power capacity, the power generation capacity installed in those countries are quite actually small, I would say, compared to the big countries. Now, if you go to Morocco, they have heavily invested already in solar. Even Egypt is mostly as well. hydro, Ethiopia is hydro, Kenya is hydro, Cote d'Ivoire is hydro, including Nigeria, despite the fact that Nigeria have a huge potential of fossil. So in terms of policy in Africa, I think the preference is already for renewable. But the fact is that we will not as well, we will not shy away from the fact that we have a huge fossil resources. And the last Africa Climate Summit in Nairobi made it clear we use fossil actually to really, I would say, unlock our potential. Last but not least, when it comes to fossil versus renewable, fossil is mostly used for transport, not necessarily actually for electricity. And the CMP, Continental Power System Master Plan, made it as well very clear that by 2040, when we reach about 1,200 gigawatt of, I would say, generation capacity, about 65 to 70% of this generation capacity would actually be on renewable, not because it's policy choice, but also it is just a continuation of an existing trend. So it's important sometimes, I think, for people as well to get the data right and to not actually really be trapped into narrative that are not necessarily the reflection of the reality. That's number one. Number two, I think about China investment, my colleague from AFC quite elaborated very well, but it's important to note as well, Chinese investment really led to significant infrastructure development and job creation, technology transfer, but it improved as well, I would say, trade opportunities. In the last report we have published about the 10 years of implementation of PIDA, out of about, with JICA actually, we did the report together, out of $82 billion investment in regional infrastructure, basically regional infrastructure, about half of those investment come directly from government's budget, directly. And out of the 82 billion, 20 billion come from debt from China. Then, of course, there is about 19 billion that come from investments, loans, basically, from the ICA, Infrastructure Consortium for Africa, which is made of MDBs, but also European investment banks, and also loan from European multilateral, I would say, organizations, or even bilateral loans from countries. So only 3% come from private sector, which is actually the fact. And our objective is to increase actually this, I would say, contribution from private sector from 3% and reach like 15% in the pillar up to 15 to 20%, at least be able to achieve the level of the Southeast Asian countries where they are at 19%. The reason actually Southeast Asian countries are at this level is basically related to the quality of the governance, but also to the quality, I will say, of the tendering system they have established there, the PPP process, the BOT process, and the ease of business. And this is actually the direction that we are taking. So I think we are going through this direction and definitely would be there. So those are the 2 points that I think are important to really address. When it comes to fossil versus renewable, we are actually already in renewable and we are going to continue on this trend. However, I think it's important for African countries to use our natural resources as well to increase our capacity to industrialize ourselves if necessary. So far, we are producing less than 3% of, I would say, the carbon emission. It doesn't mean we need to increase our contribution to carbon emission, but we should not be told to actually stop using our resources. It's important. It's a policy decision that was made by our head of state and government during the ACS, and we will stick to that. Thank you.
And thank you very much. I now want to give the floor last to Naoki, so for him to react to any questions that he wants to answer. Please.
All right, thank you very much. All right, Chinese investment. I totally agree with the Amin mentioned, and they have a good impact, but I would like to introduce the fact of the data coming from international debt statistics, World Bank, and Chinese lending in new committed in 2020 is interest rate is 2.48%, and grace period is 3 years, and the repayment period is 12 years. It's not really so concessional, not really concessional. But thinking about the 2020, many finance ministers from Africa during the conversation with me is mentioning about China's concession. China's loan is a little bit expensive, but much better than Eurobond, or the interest rate at that time is over 10% or something crazy. So there some countries still suffering their burden of lending, Chinese lending, but it's not really serious one we are thinking. So but again, concessional loan is much concessional from G7 or MDBs or World Bank is really concessional. So African country is really needing them. And about renewable energy investment is as Amin mentioned, the existing energy is coming from renewable one. Example is Kenya. 95% of energy is coming from renewable energy. So if we talk about the Mombasa SEZ, their power is coming from all 100% can be provided from renewable energy. So in that sense, export from Mombasa port is going to be value added for the international market. That is what we are thinking. Thank you.
Thank you very much. I think we're running out of questions, time for questions, so we cannot do another round of questions, but maybe let me close with one question before I give the floor back to Michaela, sorry. So basically, we are now in the point in time where the new commissioner or the designate is preparing, where members of parliament here in Brussels are preparing, questioning them. So I want to give each of you the opportunity to highlight one thing you would like to be and the new agenda for the new commission, or maybe Antti, for something that you think will be in there, or that you would highlight that would be in there. I don't want to put you on the spot to tell your new boss what to do. Maybe Fola, do you want to start?
I mean, thank you for that. And I think, I'll take an example of an issue that is very top of mind in Europe, in the US. If you look at the current US presidential elections, a lot of talk about immigration and illegal immigration. And I know that a huge concern in Europe is about illegal immigration and illegal migrants and what have you. And the solution to that, if you really think about it, is solving the human development problem at the source that is making these people embark on these journeys to very distant lands, right? None of them really want to be doing it. They're doing it because they are in a human development challenged area. And so I do think that a significant amount of investment, like what you're talking about, is required because it is good practice, because it is just practice, because there's commercial benefit from it, and also because it helps to solve the illegal immigration problem, which nobody wants, including African leaders don't want it, because in Africa we're dealing not just with illegal people living illegally, but we're also dealing with brain drain, with people living legally to other parts of the world where their talents are required. So I would say when they think about, as they're forming their plans in the EU, when you think about that issue of illegal immigrants, think about it from what is the human development challenge that is making these people leave where they're coming from, and how can we contribute very significantly to solving that problem? And Europe does have the power to solve that problem.
Thank you very much. Some applause here in the audience for that answer. Naoki, do you want to go next?
Sorry,
So
I couldn't.
the question was,
I couldn't catch you.
So the question was a brief answer on what you think one thing that should be on the agenda very high up for the new commissioner. Maybe we can give the question to the fellow panelists first, so you have a moment to think about it. I mean, do you want to highlight one thing that you think should be on the priority for the next 5 years?
I think we have our priorities in the African Union, and one of the things that eventually the new commission can do is working with us on our priorities and not define priorities from Europe for us. I think that's the most important thing. Thank you.
It also gets some applause here in the audience, that answer. Antti, what do you think will be or should be your work for the next 5 years? What will be the highlights?
So first of all, we are of course preparing our new commissioner and the new commission to reply to any tricky questions in the parliament or elsewhere. But no, I think that's a good one. No, I think Global Gateway is the highest up on the mandate list for my future commissioner, the Commissioner for International Partnership. And that means actually that how can we work together with our partner countries precisely on those issues that move the needle on the development, whether it's on human capital and human development or on the infrastructure interest of mutual interest. Thank you.
Thank you very much. Naoki, do you have something that you would like to, especially EU, Japan, development, finance, what you would like to tell the Commission designate they should focus on for the next 5 years?
Yeah, just as I really want to go back to the first message from me is infrastructure and a return industry development should be well organized. That is very, very important. Thank you.
Thank you very much. Michaela, do you want to close this? What are your thoughts, your take-homes from the last hour and a half?
Okay, thank you, Nicholas. I'm certainly not going to attempt to even summarize this very rich conversation. Actually, some really, really strong points made from all the panelists. But in essence, I have actually seen some alignment from all of you on the challenges, on the needs, on the priorities, on structural change, on financial hurdles that need to be overcome, on the geopolitics as well. That shouldn't constrain, the infrastructure investment, what you're trying to do, and certainly some very clear messages for the new European Commission around, listening to your partners and looking at their interests and priorities as well. On if they want to solve the problem of illegal immigration, invest in human development and human capital. The importance of working together, something we didn't quite cover in this conversation, which is absolutely critical, which Naoki mentioned right at the beginning, how to coordinate. I mean, all these infrastructure initiatives, so that you're not also overcrowding and in unnecessary competition with each other. which is certainly going to have detrimental effects. So with that, let me thank all speakers for your very insightful, excellent remarks and inputs into this discussion. Thank you to our audience as well, both online and in person. And we have a long list of questions which we will also take away and share with all of you in the hope that you can respond to some of the specifics that have come up. Thank you to Bruegel, Nicholas and colleagues for jointly organizing this. And also thank you very much to JICA in particular for working with us and supporting us to put on this event. Thank you very much.
Thank you.